Coles reports a strong profit and has good news. The $3 iceberg lettuce is back. The Prime Minister Anthony Albanese and Opposition Leader Peter Dutton mark the 6-month anniversary of the war in Ukraine, and Domino's Pizza pushes into Southeast Asia. It's Thursday, the 25th of August, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. I'm really enjoying earnings season this week because we've got lots of the big supermarkets, Domino's, a lot of the food companies coming out, and we have Woolies today, of course, and telling us what's happening to food prices. And generally, the news is not too bad. I'm quite excited.
What I love about it is just the stories behind the numbers as well. And that is, I think, kind of why it's so exciting with a podcast like this, because you actually have the opportunity to explore some of those stories. And listen to me sounding all serious for starting a show.
You are. And every single result has a great story behind it. It's really hard to get across it. Actually, what I might try and do over the next 6 weeks or 8 weeks is just go through the results again and just pick out those little bits of information, like the $3 iceberg, which everyone needs to know about.
You've got an interview coming up today, Sean, and I love this chat. This is a really, really interesting one. You're speaking with Adam Myers from CrowdStrike.
Yes, all about cybercrime and international actors and overseas states trying to take our data and take our money and what's happening and what legislation is doing and how it can't keep up with it. I mean, it is a great chat.
Yeah, and I think he's like a head of intelligence for CrowdStrike. So it's very much the digital front line, and he just tells it exactly like it is. So it is definitely worth sticking around for that one. But the main story this morning, Sean, is all about Coles. And the supermarket giant is reporting that people are still buying plenty of groceries, but they're stocking up on cheaper products. And praise be, the iceberg lettuce is heading back to $3.
Whew. Best news story of the week, without a doubt.
Yep.
Food inflation is up above 4%, according to Coles, thanks to a combination of supplier price rises and fresh produce shortages caused by flooding in New South Wales and Queensland. But inflation is expected to moderate during the current 6 months. While the iceberg peaked at $12, it's now down to about $4, heading to $3. Bakery products, however, are now under price pressure because of a rise in wheat prices caused by the war in Ukraine. Packaged grocery prices continue to rise due to high costs for raw ingredients, packaging, freight and labour. And also, suppliers to Coles are asking to lift their prices much more now than they were pre-pandemic.
So what's happening then? I mean, with the exception of the iceberg lettuce, are all prices rising?
Well, no, because price wars are still at the heart of the two big supermarkets. You throw in Aldi, the three big supermarket chains. Now, Coles Chief Executive Steve Kane said the prices of 1,168 products have been frozen until the end of January, and those of another 500 products are set to fall. Woolworths will report its earnings today. It'll probably tell us more about what it means to do on prices. So fortunately, if you shop around, you can get cheaper food prices.
So without trying to sound too much like a consumer advice show, customers should just really be looking hard to find deals, and they are there.
Yeah, that's right. And to be honest, it's already happening. Coles says shoppers are buying more cheaper products. $1 pasta, for example, is a very big seller at Coles at the moment. There's also been a shift from fresh fruit and vegetables into canned and frozen options, though that's only been slight. And customers have moved away from more expensive cuts of meat. For example, they've shifted from beef mince to cheaper chicken and pork varieties. Now, overall, Coles, which announced a 4% jump in net profit for the last financial year to more than $1 billion, is experiencing a return to pre-COVID-19 shopping trends where customers shop more frequently with smaller basket sizes at the big shopping centres. Labour shortages remain a big challenge for Coles. Its share price yesterday fell almost 5%.
I really do love the fact that all of that came out of Coles reporting their results yesterday. So much information.
Yeah, definitely.
Now, local markets, what happened yesterday?
Well, the S&P ASX 200 rose 0.5% to about 6,998 points. Couldn't quite get past that 7,000 point mark. Energy stocks really were the ones that did best, and that's on the back of higher energy prices. We have got plenty of profit results coming up in the reports. We might lead the markets there.
All right, what's the latest from international markets?
Wall Street closed slightly higher yesterday. Not much happening in oil and gold markets, and the Aussie dollar is up a bit, trading over 69 US cents. But Michael, I currently have a fascination with lumber prices.
Hang on, stop. A fascination with lumber prices. Can I guess why this is?
You have one guess.
Does this have anything to do with the fact that you are currently renovating your house, Sean?
Bingo. Just like that.
You are very predictable. Carry on.
The good news, Chicago lumber futures, something I'm sure you watch closely, tumbled again over the past few days, and they're down about 60% since their March peak. Why? Well, higher interest rates have curtailed home building in the US after it surged during the COVID period. Suddenly, lumber producers ended up with lots of stock, and so now they've had to cut the prices. But it's not that good news for me, which is what this story is all about, clearly, because lumber is sold via futures contracts. So it means what you might pay for lumber now was probably set about 6 months ago, and that's when prices were higher. Point of this, or the moral of the story, if you can put off buying lumber, i.e. renovating, do so for 6 months or so, because prices should be lower.
All right, there we go. We'll be back in a moment with the rest of the day's business news. Sean, both Prime Minister Anthony Albanese and Opposition Leader Peter Dutton have marked Ukraine's Independence Day 6 months after Russia invaded the country.
Mr. Albanese said Ukraine's ongoing resistance is a test of the world's commitment to democratic ideals and the integrity of international borders. Mr. Dutton emphasised the support provided by the former coalition government. Australia is the largest non-NATO provider of military aid to Ukraine, and more than 3,800 Ukrainians have fled to Australia since February. Meanwhile, it's feared the anniversary will trigger fresh attacks from Russia on Ukraine, with authorities warning people not to congregate in major cities. US allies are also working towards providing a multi-billion-dollar military support package to mark the anniversary.
Sean, this is an interesting one. The Reserve Bank wants to weed out the tatty, torn banknotes that are circulating in the economy. So I suppose you'd have to kind of look under your mattress and grab your supply out from underneath.
I use cash so seldom now that when you do, you go to an ATM, and inevitably it's really good quality note, polymer note. But apparently there's plenty of tatty, torn notes around, and the bank wants to improve the quality of cash in the circulation. Now, the decline in the use of notes means it's actually more expensive for businesses that gather, sort and return damaged and busted bills to the central bank, so it's becoming uneconomical. The Reserve Bank prints and produces Australia's currency out of Craigieburn in Victoria. It has deals with distribution businesses to deliver the hard cash around the country. Now, currently, only the 4 major commercial banks purchase wholesale quantities of banknotes from the Reserve Bank, and then it's sort of distributed via the banks, really. But the Reserve Bank wants to introduce a standard contract for other companies to access wholesale banknote supply. It's a way of getting these fresh banknotes into the economy faster. Kind of fascinating, I reckon.
Yeah, it is. I just love talking about cash and just the way that again, one of those stories about how our behaviour has changed probably permanently as a result of the pandemic.
Exactly.
Now, just staying with the Reserve Bank before we get too far away from that, Sean, the RBA has warned that the major banks are lagging insurers when it comes to understanding how to use data to manage financial risks.
Yes, and the comment was made with particular reference to climate risk. The big banks will face climate risks in their mortgage books as insurance becomes harder for customers to obtain, according to the Reserve Bank's head of domestic markets, Jonathan Kearns. While insurers are being hit with high costs resulting from more extreme weather, there's systems in place already to assess the likelihood and costs of such events. They've also had an advantage of being able to reprice premiums annually. All this is stuff that the banks haven't thought enough about, the Reserve Bank thinks, and they could get bitten by it eventually.
Okay. Now, EML Payments, Sean, has uncovered further fraud in one of its subsidiaries, sending its share price tumbling yesterday.
That's right. The payment systems business has been plagued by problems in its Irish subsidiary. Now it has problems in its Centennial business, which operates across Europe, and which EML purchased only last year. Shares fell 11.6% yesterday after EML said the fraudulent activity involved merchants within its direct debit processing business. EML said it's taking steps to investigate and understand the circumstances surrounding the fraud and has commenced steps to recover any losses. But for that company, it's like Groundhog Day.
Yeah, it certainly is. Now, Sean, I'm interested to know how you're going to cover the Star inquiry in Queensland, because we've had about 18 months now of salacious casino news. And this latest inquiry really kind of promises much of the same. Just like yesterday, it emerged, and this almost sounds like something out of a movie. It emerged that Star Entertainment allegedly gave a $53,000 gold Rolex watch and a birthday cake to a high roller who had been banned by the New South Wales Police Commissioner from gambling at its flagship casino in Sydney.
Yes, counsel assisting the investigation, Jonathan Horton QC, suggested the expensive watch and birthday cake were designed to lure the banned gambler over the border for repeat visitations. That's to Brisbane and Gold Coast, to the Stars casino complexes up there. But Chief Marketing Officer Chris Peasley disagreed. This is according to the Financial Review. He told Mr. Horton that the intent was to reward the gambler for their loyalty and to recognise their milestone birthday. The inquiry, which is raking over Star's Queensland operations to investigate wrongdoing, also heard the group changed its responsible gambling policy the day before the public hearings kicked off in Brisbane on Tuesday. From Monday, casino employees in Brisbane will now check on customers and encourage them to take breaks after 3 hours of non-stop gambling rather than 6 hours. Anyway, back to your question, Michael. It's just too good a story not to report.
Oh, absolutely. And if it keeps on bringing out the gems like a $53,000 gold Rolex watch, it's going to be very hard not to report it every day into the future. Sean, former Prime Minister Malcolm Turnbull says Lachlan Murdoch's legal proceedings against a small publisher are, quote, hypocritical, saying the Murdoch media organisations have defamed more people than any other in Australia.
Mr. Murdoch officially commenced defamation proceedings against Private Media, the publisher of news and politics website Crikey, on Tuesday evening over claims in an article linking the Murdoch family to the January 6th Capitol riot. Mr. Turnbull didn't hold back. Quote, I think it's hypocritical. Very few people have defamed more people than the Murdochs over the years. They're always bleating about freedom of speech and how the defamation laws are too harsh, and they stifle free speech. End quote. No more to be said.
This one has a very long way to play out, so we'll be watching it with a great deal of interest. Sean, another company to report yesterday was Domino's Pizza. We love talking about Domino's, and it said ingredient prices were coming down.
Yeah, margin and Domino's have been squeezed in recent quarters by food prices, and the good news for shareholders is that there seems to be some relief in sight, at least in terms of cheese prices. That's by far the biggest commodity that Domino's uses. However, the group will have to lift its prices to combat inflation, boss Don May said. He was speaking after announcing a 12% drop in underlying profit last financial year. Customers are putting less items in their basket, resulting in average delivery service fees dropping by 25 cents per order. But Domino's Value Max offering is outperforming its long-standing value range. What's that mean? People are buying the $8 pizzas, not the $5 pizzas. The company will also step up its expansion in Asia with the acquisition of 287 stores in Malaysia, Singapore and Cambodia. It eventually aims to expand to 600 stores across those countries. Now, the Domino's model, whether it be in Asia, Australia, Europe, is pretty simple. Get plenty of stores, make sure they're close to customers so pizzas arrive fast and hot. And that's the strategy. Domino's goal is to bring delivery times down to 10 minutes. Investors like the result and pushed up Domino's share price 7.6%. Mind you, it has halved over the past few months.
Yeah, I think we spoke to Don May, would have been 12 months ago or maybe a little bit more, and it was a fantastic interview. So if you haven't heard it, search for that one on your podcast playlist and enjoy, because it is a fantastic insight into the way Domino's operates. Sean, gaming group Tabcorp reported a slight loss on underlying earnings yesterday thanks to COVID.
That's right. Mind you, its net profit was $6.7 billion, thanks to a handy $6.5 billion check from the demerger of its lotteries business. That, though, couldn't hide the pain the wagering business is in, and has been in for some time, really. It struggled to compete with online nimble competitors, and the breakup of the wagering and lotteries business was a way of realising benefits for shareholders. There was some good news for shareholders out of Tabcorp, though. Its market share rose to nearly 25%, up from 23.9%. That's in terms of active digital customers.
Okay, then so how did the demerged business, the Lottery Corporation, perform?
Oh, it's flying, recording a record result with earnings and revenue growing at a near double-digit pace. Now, obviously, it's a record because it's the first earnings period for the new company, but it's also a record for that segment of the business when it was part of Tabcorp. Management liked to sell the Lottery Corporation as an infrastructure business or an infrastructure-like group. Stable earnings, long time frames, investors like it.
Engineering services group Worley announced a doubling of net profit.
Yeah, this is a company which has benefited from volatility in Europe. Worley Chief Executive Chris Ashton said Europe's need to secure energy supplies following Russia's invasion of Ukraine were creating new opportunities through the building of more infrastructure as European countries cut their dependence on Russia. Building of more infrastructure means more work for Worley.
All right, one last one. God, there's some really good stories around today. Logistics software company WiseTech Global has announced a bumper 80% surge in profit. Not too bad.
No, look, WiseTech is almost as well known for its volatile share price trading over the past year or so as it is for the business itself. The company said it had signed up 10 new global customers to its flagship CargoWise software platform last financial year. They're really big names. UPS, FedEx, Access World, those sorts of people. It was really a bumper year in the end. Profit was up, revenue was up, and the share price yesterday was up 12%.
Yeah, it's a pretty good day. Moving on to overseas news, Sean, the US will hold the first in-person meetings with ministers from 13 Indo-Pacific nations in Los Angeles next month under its economic initiative designed to counter China's influence in the region.
The gathering under the Indo-Pacific Economic Framework for Prosperity includes Australia and will discuss trade, supply chains, clean energy, tax and anti-corruption. The US has stepped up its efforts to engage Asia in economic matters, and 13 countries have signed up to the new grouping. It's an effort to keep China at bay. Former President Donald Trump withdrew the US from the Trans-Pacific Partnership in 2017, and the US's influence in the region has sagged ever since. Joe Biden is back trying to become more influential again in the region.
Okay, and Sean, almost half of the European Union remains under drought conditions, with the weather set to remain hotter and drier until November. Some of the pictures out of Europe have just been extraordinary, just places where the water has dropped to levels that pretty much no one's ever seen before, and shipwrecks are being exposed and all this kind of thing, just really quite devastating.
It is totally devastating. And if you add in the incredible drought in China at the moment, some really large food growing areas just don't have enough water. A real problem. And of course, in Europe, you've also got the reduction in gas flow from Russia. In Europe, the combination of a severe drought and heat waves has created unprecedented stress on water levels across the whole region, according to the EU's Joint Research Centre. Some of the hardest hit areas include Italy, southeastern and northeastern France, eastern Germany, eastern Europe, southern Norway, and large parts of the Balkans. About 47% of the EU is under drought warning conditions now, and 17% are at a higher crisis level. Vegetation and crops obviously have been affected, and that will feed through to prices.
Okay, up next is the Fear and Greed Daily Interview. We mentioned this at the top of the show, Sean. You're speaking today to Adam Myers from CrowdStrike.
That's right, all about cybercrime and those nasty people around the world who seem to be expanding their operations. What was interesting is, what they're doing in Australia, and they're actually growing in Australia. So this nefarious activity is growing in Australia, and how it's shifting from ransomware to capturing data. And that's actually more valuable to some of these people. Fascinating interview.
Yeah, Adam joins us from Washington, D.C. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Thursday, the 25th of August, 2022. Make sure you're following the podcast and join us online on LinkedIn, Twitter, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.